it's a lot of little things with taxes. There are really three ways to save on taxes. The income is exempt. That's what we're talking about this afternoon, the IRAs and 401ks. Deductions, and most of those are a bunch of little ones that add up. And once in a blue moon, a silver bullet. A silver bullet is, for example, two companies are merging and there are ways to make it non-taxable if you do certain things. That's a silver bullet. So those are the three ways. We had an interesting case out here recently. There was a realtor here in the Bay Area who makes stupid money because your properties are insanely inflated. And what he does to attract the really high-end clients, I mean, he gives out serious promotions. I mean, he buys expensive wine, takes his clients to really nice skiing, a ton of stuff that we had an agent out here who wouldn't let him deduct it. And that's just, the tax code says it can't be extravagant, but it's based on the circumstances. There's a case, for example, where a realtor wrote off a Mercedes. Why? Because all the clients drove similar cars and he had to fit in. And the tax court bought it. So there's a lot you can do, but it's a lot of little things, and it influences how you do your books. Let me give you one more deduction I want you to think about. I'll take questions, then we're going to enter. We're going to buy a computer, a printer, and ink, and it's going to display how we do these general expenses in QuickBooks. And again, we're spending about 2 minutes doing the entry, and about an hour discussing what can you do and why. So again, true to my word, I said the how would take less time than the why or the what. One other deduction, and this one I've never seen another accountant think about, and it's just so basic. How do you write off beautiful furniture, beautiful carpets, lamps, high-end shotguns? Hey, I'm a Midwesterner, right? I need my boomstick. How do you write those things off? If you have an office, and it's legit for your type of business that you need, I'm a lawyer, I bring in some pretty high net worth people, they expect a certain level of class, in spite of my words and actions. And so I have nice furniture in the office. How long does it take to depreciate the nice furniture? 5 years. What happens when you take nice furniture out of a regular LLC? This doesn't work with a corporation, be it S or C. How does it work when I take furniture out of an LLC after 5 years? There's no gain when I take it out, so there's no tax impact. I take it out at a zero basis, so if I ever sell it, I have a gain. So what do I do after 5 years of having furniture in an LLC? I distribute it like a dividend. Remember the distribution? I would distribute the furniture. Because you got it. It'd be zero because I've depreciated it to zero. The asset balance on the books for the furniture would be whatever I paid for it minus the depreciation, which are the same number if I depreciated it to zero. So it's a distribution. It shows up on the books, zero. How do I execute that? A bill of sale. You can get those online for $5, a template of one. So I distribute it. Now, how did I do it with a gun? Me, the owner. The furniture then leaves the office and comes to my house. It's no longer used in a business. It's been used in a business for 5 years, and then we bought new furniture. How do I do it with a gun? I know we shouldn't say that word in California.
Decorate.
How do I do that with, let's translate it into Bay Area ease. Fascist instruments of oppression. I have in my law practice a nice shotgun that I never use. Who uses it? When clients visit me in Ohio, which it's mostly rare, I mean when they're there they'll visit, and I have a few clients in Ohio. When they visit me, one of my favorite entertainment activities is we discuss business and then we go to the gun range. It's sort of a test, really. If you refuse to shoot when we come out, I fire you. Just kidding. That gun is only used by clients. Instead of them renting a gun at the range, they use that one. I keep a detailed log of when it's used. Very detailed log of exactly who uses it when. I never use it for personal purposes, that's the point. In 7 years, because it takes 7 years to depreciate the shotgun, what do you think I'm going to do with it? And what do you think the practice is going to do? New gun! Now let me give you the reverse. This will pay for the course and the time you took to listen to me alone. Go home and find all the things you use in your business that you never wrote off or put in the business. Did you buy textbooks in college? Are they relevant to your business? I was a business major, so I figured business major books are relevant to my business. When you give your business an asset, so you would use a bill of sale but in the other direction. You title it from you to the business. You walk through your office, bookshelves, lamp, desk, carpet, everything that your business is using that it never occurred to you to write off because you just owned it already and you took it and used it, goes to your business at the lesser of cost or fair market value. So whichever's less, cost or fair market value. Now, I read voraciously. In college, I literally read a book a day. I was a business major. I didn't have to go to class because, no, seriously, I did a regression analysis of my tests and predicted which questions would be on the tests, and then showed up and took them and did really well without showing up to class. And the professors were just like, that's really great. Don't ever tell anyone you did that. And so I read a lot. So I have a big library full of books. What did I do? All the business relevant books went into the business, the lower of cost or fair market value. The cost was right there on the cover. What's fair market value? In Ohio, we have a chain of bookstores called half-price books. And the default price, unless they put them on clearance, is half the price they're used, half the price of whatever. So I figured that's a great proxy. Half the price that was on the book, I put them in the business, and then I write them off as what? Education expense. So there are a lot of assets that you're using in your business that you haven't yet written off because the business didn't actually buy them. Contribute them to your business and either depreciate or expense them as appropriate. Isn't that clever? And I've never heard accountants that's so basic, and I've never heard them tell people that. Just think, look at things and think. Startup expenses. You get write-offs if you're in a trade or business. That's a gray term of art. It's like, let's go back to our good friend Bill. He would have been great on the Supreme Court for the porn versus art discussions. Because you know how they would have these things before the Supreme Court, and they ask the judges, is this protected by free speech? Is this art? Or is this porn? And Clinton would be like, well, I consider myself sort of an expert. Are you in a trade or business? Did you buy or sell something? If your business is renting properties, did you buy a property and rent it out? If so, you're in a trade or business. And you can write this seminar today off, assuming you paid for it, because Kathy does evil things with not charging people, which makes me very sad. Are you in the trade or business? Or are you just looking to get in a trade or business? John, I haven't really bought a property yet. Or how about if you're flipping? When are you in a trade or business for flipping? The IRS would say you have to buy something. I would say, can you show that you're trying to acquire properties for a profit? Can you show contact with a realtor, making offers? Hell, make ridiculous offers. First of all, that's what you're supposed to do to begin with. Make ridiculous offers to realtors and document them. That's an argument that you're in a trade or business. If you're not in a trade or business, how does it work? This class, you took it, you're not in a trade or business, you're thinking about real estate for the last 20 years. It's a startup cost when you have a trade or business. So all the costs of the seminars, if you haven't done anything yet, you can't actually write off presently. You accumulate them, they become a startup cost. When you have a trade or business, you write them off. And what happens with startup costs? The first $5,000 are deductible the year you start the business. The rest of it depreciates over 15 years. So there's some of the deductions that we hear about. I lied. I'm a lawyer. It's what I do. It sort of contradicts what I said before. So did I lie when I said I'm lying, or did I lie when I said I was telling the truth? It's really hard. One more. You can rent your house to your business. The 14 days of rental a year or less of your personal residence are not taxed to you. We get this in Columbus because we have a golf course up there, Muirfield, where all the hoity-toity Tiger Woods and all them have a tournament. And the houses along the golf course rent for like $2,000 a day, which again, in the Midwest is real money. Here, I believe it's like a hotel or something. Can you rent your residence? Can your business rent your residence? Yes, but remember what we said before, it has to be real. You have to actually do something, have a party there, invite people over, have an annual meeting and document the meeting. Research what do houses rent for when you rent them for one day in our area. So it takes a little bit of work, and that'll put a lot of you off. I get it. cost benefit. It may not be worth your time. Totally get it. If it is worth your time, your business can pay rent for your house, and as long as it's real, it's bona fide, you actually do something, it's a deduction to your business, and as long as you rent the house out less than 14 days a year, no income. So a lot of little tricks like this add up.